Welcome to the Business Finance Matters podcast. Over the next 15 minutes, we're going to tackle some of the topics that we get asked about on a regular basis so you business owners can get a better understanding of what it is that you're probably dealing with on a day-to-day basis. Let's get on with it.
Well, David, good to see you again. How are you, my friend?
Good. Just making a few notes to make sure I'm ready for this one.
Yeah, all right, thank you. As you know, I've always got my my folder here. I was thinking of using a tablet the other day, and then I thought...
Unless you got a headache, I wouldn't.
Okay, thank you. Right, now, topic. We want to talk a little bit about lenders and this business of what you were talking about the other day, confidence, assessing risk, likelihood of paybacks, and, you know, all the rest of it. So tell me, what are you banging on about? What is it you want to know?
How long you got? So look, a lot of the work that you know I get involved in, and certainly other members from the guild get involved in, is we need to know what the lender market consists of.
Okay.
And I think we said this before in previous costs, and I wish, previous podcasts. I hope I can get proven wrong here, but I generally believe that the UK has more lenders than any other nation in the world.
Well, we collectively, our members are dealing with nearly 200 different lenders.
Well, there we go. I'd love someone to prove me wrong here, but I'm pretty confident that we are standalone in the number of lenders that we have in our marketplace, which has many benefits, because of course it means that we've got a number of options. But of course we can't work with every lender. So what we have to do is we have to establish the lenders that we are comfortable working with, and that will come from a different backgrounds. Also, different lenders have different appetites, different criteria, different areas that they want to specialise. I mean, there is a wide range, which I said a minute ago has benefits. But I think we've got to recognise that, you know, every lender. I mean, if it was the banker chief and beef lending money, we want to make sure that, as near as damn it, if we're putting the money into a business, that we can get it back.
And I think that's it, isn't it? We're investing in a business, aren't we?
Yeah.
We're almost like the lender's almost like a silent shareholder, isn't it? Really.
But of course, you know, if we use a standard business loan, for example, the repayment term is say 5 years. We don't know what's going to happen in year 2, year 3, year 4, year 5, and businesses, as we know, have their ups and downs. But initially, when we're looking at the underwrite, the bit where the lender decides, is this something that we're comfortable lending?
Yeah.
The business is comfortable lending to, then are we going to do it or aren't we going to do
it?
So I think what I'm trying to say is that every lender has its own criteria, and we need to recognise what that criteria is. And I think it's fair to say that you know, everyone is different.
Yeah.
So, you know, depending on their risk appetite, depending on the security that they will be looking for to feel comfortable putting whether it's a loan or whether it's any business finance product, that's the same criteria for underwriting.
Do you know, it strikes me, Dave, we've talked about this before, but I know it challenges you to keep up to speed with what's going on. How on earth does a business owner do that? They don't, do they? That's the problem.
But you worked for a lender. You know,
I did.
You understood.
Sorry, folks, guilty.
You understood that, you know, when an opportunity to provide some funding for a business came onto your desk, then there was a process that you as a lender wanted to make sure you were comfortable with. And that's all you can do on the day.
Yeah.
What have we got?
Yeah.
You know, is there affordability here, which is the number one that lenders look at here? You know, no one wants to lend unless it's been lent sensibly. You know, can they repay the loan? You know, how's the business performing? So we want to get some fiscal evidence to suggest that the business has actually been performing well. And if it hasn't, and of course, bear in mind, COVID wasn't that long ago, as long as there's a good reason. But the point I'm making is we have to make an application to a lender driven by what we think they will be interested in supporting. And so what we're aiming to do is make sure that the business gets the right finance, make sure that it goes with the right lender, and more importantly, make sure that when that facility becomes live, then we're also making sure that carries on, and if there is a problem, and problems do occur, that we are part of that relationship with the lender and with the business. But what I'm seeing is that the lender risk appetite is becoming a lot more stringent. You know, they're looking for example, if part of their criteria is they want a personal guarantee, is a director a homeowner.
Oh, right.
And there are some lenders again, it's not for us to sit here and talk negatively about them, because that's how they lend. But there are some lenders that will not provide any type of finance without being a homeowner.
That's really interesting, because and some of our listeners and viewers might remember, we did a series on this personal guarantee. We did an episode of this personal guarantee malarkey. And I told you, and I can't remember who our source proof was off the top of my head, but less than 2% of personal guarantees are prosecuted.
And this is why I think I was talking about, I was lucky enough to be born in a generation where I got my first house at 24. I walked into the Abbey National Building Society, gave them 3 months payment, 3 month pay slips, had 5% deposit, had a mortgage approved. That's all changed now.
Yeah, of course it has.
And, as much as we go on about it, lenders have to recognise that the home ownership process is a lot more difficult.
Well,
now.
I think the model's gone, hasn't it? I mean,
and the desire to own any property.
Well, my children are now in their 20s and the late 20s. They have absolutely no desire at the moment to go anywhere near a mortgage.
With my kids, there's no aspiration.
No.
And therefore, lenders have to recognise that, if our criteria is going to continue to be, if they're looking for a personal guarantee, be a homeowner, well, so be it.
Yeah.
And that's fine, but I hope that changes.
And so do I, and that's the point I'm making on that subject. I like to think it's more about, and we use this horrible phrase, but I think we all know what it means. It's the skin in the game, isn't it? It just makes someone think twice, doesn't it? Money's a bit tight this month. I'm personally guaranteed this loan. I better make sure that's paid because
Fine, okay, but in terms of lender risk. They are having to. They're looking under the bonnet a lot more so now.
So are decisions taking longer to get to? They're asking for more information.
Yes.
And that, in a way, that's not a bad thing, because there is a great responsibility that not every lender takes. I hasten to that. But to lend responsibly and to lend fairly.
And again, this isn't a negativity.
No.
As for business owners, though, they need to recognise that because of what's been going on in the economy, not just within the UK, but a lot's changing, a lot's shifting. There's a lot of lack of confidence about what's going on in the business world.
That's a key word.
And therefore lenders have to. They have to recognise that we need to get under the bonnet a little bit more than perhaps they used to do.
Do you know, you're extolling the virtues of working with someone like you and some of our guys and girls in the guild. Again, I always refer to imagine a business owner trying to understand this. Imagine a business owner effectively hawking around the high street, the metaphorical high street, the digital high street, looking for how, not only would he not know the right product that's the best fit, probably the first place that offers him some sort of facility. But what I see in the strength of what you do for a living is you're managing expectations. Correct. Yes, it might take longer. Yes, you might have to provide more information. But at least with someone like your good self, you're almost taking a business owner by the hand and saying, right, let's just sit down. This is how it's going to be. This is what's going to happen. This is going to take X amount of time. That's going to take Y amount of time. But if we get the right information at the right time, with the right lender and the best fit finance for you, it will happen.
What I'm finding frustrating, and again, it's just the way the world is that depending on the lender that you're working with, they can range from the sublime to the ridiculous. And sometimes I'll be sat there having already, because of my background, established that there is a business here that has a lot of good, yet the lender is still questioning this, that, and maybes. And that can often be frustrating for me. But at the end of the day, it's not my money. But I often get asked the question, if it was your money, would you lend against it? Now, I know it's easier said than done, but that's the way I think. If I'm working with a business, and despite any negativity that's occurred in the past, for whatever reason, but I'm looking at something today, would I lend money against it? Now, if I believe that, then I'm trying to get
David, I'll back you up on that. I know that you and I have known each other for many, many years in different capacities, some of it in business. But in those business capacities, if I know one thing about you, if you believe in the business you would lend them the money.
Absolutely.
I know that, but I equally know you have walked away from businesses and gone, no, I don't. And it's all often, I wouldn't say it's a clash of personality, but it's a no confidence in the people that are running that business, that they know what they're doing.
And again, when we go back to lender risk, and it's happened to me recently, and I've said to the lender, look, I get what's happened in the past, and this has been fixed. I get that there is, what I'm trying to say is I'm trying to paint the picture of this lender.
Well, the lender hasn't met the customer
risk. No,
for a start, have they?
But I'm trying to explain to this particular lender that this happened in the past. This is where the business is now.
Yeah.
And this is what they're forecasting for the future.
Yeah.
And as far as I'm concerned, mistakes happen. And as long as I'm comfortable that, for whatever reason, these mistakes happen for logical reasons. But, I still recognise that the lender has to feel comfortable. The risk monitor dial, whatever you call it, has to be pointing in the right direction. I totally get that. But what I guess the purpose of this podcast is to say that the risk levels of majority lenders has gone up a notch or two.
Okay.
They are.
So the requirements
they are looking a lot deeper into a business and making sure that the lend is as sensible, first of all, and is secure as it can be.
It's like I said earlier, wasn't it? That lender is investing in that business. It's investing in maybe tangible capital equipment, might be cash flow, but what it's always investing in every instance, is the people that are running it. That's what they're backing.
I disagree with that because.
Oh yeah,
yeah.
All right.
I'll disagree with that. I'll tell you why. Because there are some really, really good business people out there.
Right.
As in, yes, you have to first of all tick that box. Are these people good people? Would you work with them? Are they trustworthy? Blah, blah, blah. But even if that box is ticked, if some of the other requirements that the lender is looking for isn't ticked, they'll still decline it. But for me, yes, always are the people. Can I trust the people? Will these be individuals that I can work with?
But that's what you're doing, aren't you?
That's what I'm doing.
I mean, I'm thinking, you love your sport. You love your netball and your
love netball
and football.
Love a bit of table tennis
and whatever. But it's that new player coming into. The manager goes and buys that new player. They pay whatever for that new player. He wants a return on that investment,
and
doesn't he?
That's a good risk analogy. So if I was, in the football world, thank God I'm not, but if I was, and I'm about to write a cheque out for 50 million quid for Ronaldo Rogadini, whatever his name is, I want that guy to make sure he's scoring goals for me on a regular basis.
There you go.
However, I don't know that's going to happen. No. In fact, he could get injured in the first game.
And often they do.
It's a similar risk.
Yeah, that's why it's a good analogy.
And the lender's the same.
Yeah.
But I think the frustration that I know, and I talk on behalf of a lot of our guys in the guild, is we know this is something that the lender should be supporting, but we can't change their decision at the end of the day. And some lenders, you can't even speak to the underwriter. And that
what's an underwriter?
Pardon?
What's an underwriter?
Isn't that who the guy takes you to your grave when you?
No, come on. What's an underwriter?
Well, the underwriter. You know what an underwiter is?
Explain.
You tell me what an underwriter is. Used to be an underwriter.
The person that owns the checkbook, basically.
Exactly.
The person that makes the decision.
He's the guy that puts his signature on something.
Girl. Yeah.
Yeah.
The person
he's the
makes
person.
the decision.
They're the person.
Okay. But the thing is, what these lenders are doing, and I would imagine they're updating it a whole time, they will give you as an introducer, intermediary, a set of criteria.
Yeah.
The levels at which we're prepared to lend, the term, the price, the type of industries we like, the type of industries we don't like. And if it meets those basic criteria, it's then your job to then effectively, as you said earlier,
but the frustrations are obviously the business. Again, you mentioned this before. The expectations are, can we get access to this type of finance? And I'll obviously make a decision on that. How quickly can it happen? Blah blah. But the point I'm trying to make is that the challenges of gaining access to finance, not only gaining access to finance, but at the right price.
Yeah.
Is this the right price? Is the set of terms that they're offering right? Are the fees? I mean, everything has to be considered.
Here's one for you. You just said something a minute ago that I was really interested in. My experience. Do you think that lenders that do not allow access to what you call an underwriter, the person that signs off on whether to lend or not, do you think that businesses don't allow the likes of you to speak to that person are missing a trick there?
Yeah, definitely.
And why do you say that?
Well, as in what? Sorry, put it
Well,
in.
why is it important for you to be able to speak to that
I think
person?
because we're very passionate about what we do. We've obviously got a huge amount of experience. And, at the end of the day, if the underwriter doesn't agree with you, then he doesn't agree with you. But if we get the opportunity to say, look, come on. I get what the negatives are, wherever they are. But look, we've got X, Y, Z, A, B, C. Why won't you support this business? But that's just part of our job.
But isn't that interesting? Because I've followed your career, particularly the last 15 years. You've always been, shall I say,
Is this the David Grosse show now?
Well, it is the David Grosse show. David Charlton Heston Grosse, isn't it? Your full name. But you've always worked better with those where you've got a relationship. Here we keep coming back.
It's my reputation.
It's where we keep coming back to this word time and time again. It's having a relationship. I wish I had one with you, mate. It doesn't seem to work.
One day. But look, I'm conscious of time.
No, listen.
And I could go on for hours.
I know you could.
Unlike me.
It's tightening up, isn't it? That's what you're saying. It's tightening up.
It's tightening up. Something else that business owners need to be aware of. It's not easy out there.
And that's why they need guidance, my friend. It definitely does.
Absolutely.
Listen, another good session, another good podcast, I think, and hopefully helpful too.
I hope
business
it's helpful.
Owners.
Absolutely. That's what we're here for.
Well, there we go.
All right.
Get your haircut. See you later.
Thanks for joining us on this podcast. We hope it was useful. Please share, please subscribe so we can share this content to as many business owners as we possibly can. And if there was anything we haven't covered in this particular episode, then please let us know. Drop us a line. We'll be happy to talk about it in future episodes. Thanks again.